The market is at a crossroads, and where it goes next has big implications across asset classes. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for May 31st. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.17, gaining 0.35% on the session. The world's most traded currency pair is tracking ECB versus Fed rate expectations. Pound sterling to US dollar is trading at 1.35, gaining 0.3% on the session. Sterling is sensitive to UK economic data and Bank of England commentary. US dollar to Japanese yen is trading at 159.25, losing 0.01% on the session. The yen remains in focus as Bank of Japan policy normalization continues. USD SGD is trading at 0.7835, losing 0.07% on the session. The Singapore dollar reflects broader Asian FX sentiment and trade flows. Australian dollar to US dollar is trading at 0.7186, gaining 0.3% on the session. The Aussie dollar tracks commodity prices and Chinese growth signals. US dollar to Chinese yuan is trading at 0.1478, gaining 0.19% on the session. The yuan reflects PBOC policy and US-China trade dynamics. Now let us look at the macro forces behind today's currency moves. Geopolitical risks remain elevated. Traders are reacting to news that Dow Jones futures, Trump-Iran delay saves Dow, but SanDisk, Bloom Energy, RE leaders sell off Investors Business Daily. This is keeping traders cautious and supporting flows into defensive assets. Equity markets are responding to reports that Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. Rate expectations remain the single most powerful macro driver for equities and currencies right now. On the data front, investor sentiment is being shaped by why Nvidia's big earnings report couldn't revive the stock market rally after all. Business Insider. The move in the dollar reflects reports that escalating tensions in the Middle East have boosted the US dollar's safe haven appeal, while hawkish Federal Reserve expectations have kept gold hovering around the $4,500 mark. Moo. Our near-term view on Euro to US dollar. Euro to US dollar is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $1.19 resistance and $1.14 support as the boundaries of the current range. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Let us close with the key events and catalysts on our radar. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. If this breakdown was valuable, please share it with anyone who follows the markets. Subscribe and hit the bell so you never miss a market update. We read every comment. Drop your view below. That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.